Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today, I'm going to provide an update on my Robinhood portfolio. Currently, I'm at $309,268. Cash position of $31,221. I also have another $30,000 in a high yield savings account so I can easily deploy into the market when there are opportunities to buy. So most of my portfolio is in US equities, and the market has been extremely optimistic, even with all the uncertainty. Take a look at my portfolio, scrolling down a bit. VOO is my largest position. This is a S&P 500 ETF, so it's exposed to the 500 largest US companies. Might as well get exposure to the market if you can't beat it. So I have almost 17% of my portfolio in this position, which makes up $47,156, up 20.45%. Next is Vanguard Information Technology ETF, which has exposure to some of the largest tech companies in the US. This makes up 7.13% portfolio, or $19,832, up 116%. Next is Schwab Large Cap ETF, very similar to VOO. This makes up 4.63% portfolio, or $12,864, up 35%. So some of you have been asking me why I have Schwab and Vanguard ETFs. I actually had a lot of ETFs in my portfolio when I first started, but I liquidated some of those positions, and I still have Schwab because they have a low expense ratio, very high liquidity, as well as very similar tracking the S&P 500 ETF. Apple, which is my largest stock position, you can see this is up 10.47% as of last Friday, and Apple is going to have a stock split soon. So there's going to be an increase in volume because of the 4-to-1 split. This makes up 8.46% portfolio, or $23,513. I'm up 163% on this position. And most of the growth is driven by their products and services business. So service meaning their apps, app store, as well as streaming service. And there's been an increase in growth in those areas, products as well. So even during these times in the tough macroeconomic level, Apple's still doing well, which shows that there's great demand for the products during tough times. NVIDIA, which is in the GPU and data center space, this makes up 5.49% portfolio, or $15,273. I'm at 126%. And the CEO is saying that gaming is one of the applications that they have, but they plan to diversify their application and use cases for their chips, such as self-driving cars and other vision computing applications. Microsoft, which is in the enterprise solution space, they've been doing well during these times with enterprise solutions. And there's also been talks with buying the social media company TikTok. This makes up 5.32% portfolio, or $14,796. I'm at 133%. Hopefully their transaction with TikTok goes through so that they can get exposure into the social media space. I mean, they do have LinkedIn, but LinkedIn is more in the professional realm. TikTok is more competing with like Instagram, more that generation, younger age group. Alibaba, which is in the e-commerce and cloud computing space, very similar to Amazon, but this is heavily exposure in the China region. This makes up 5.24% portfolio, or $14,559. I'm at 49% on this position. Amazon, which is in the e-commerce and web service space, cloud computing, this makes up 4.54% portfolio, or $12,630. I'm at 166%. And during these times, Amazon definitely benefited from all the online activity. There's greater demand for their service, so props to Amazon for being in this industry. Visa, which is a payment processing company, makes up 4.11% of my portfolio, or $11,415. This is up 72.24%. So Visa, I believe their overall revenue dipped, I think either 20 to 30%. But that just shows overall, at a macro level, when people are spending less, then there's less revenue for Visa. But when times get better, then Visa will benefit from that. Tencent, which is in many online services such as social media, financial services, gaming, just to name a few things. They're exposed to the Asia Pacific region. This makes up 3.81% portfolio, or $10,600. I'm at 56.8%. Alphabet Class A shares, which has voting rights. Majority of the revenue is from online advertisements. And during these times, people are cutting back on marketing spending, so Google will be impacted by that. This makes up 2.14% portfolio, or $5,951. I'm up 44.69%. Seems like Google or Alphabet had less growth relative to Facebook. Google pretty much maintained their year-over-year growth, which is not bad. It's just not growing. It's at least maintaining during these times. But yeah, when things get better, then Alphabet will do better. Alphabet Class C shares. This makes up 1.6% portfolio, or $4,452. I'm at 48%. Facebook, as I mentioned, this has a lot of growth potential and a lot of daily and monthly active users, and they continue to grow their user base, which is very impressive. And they're increasing. Hopefully, they can increase their revenue per user. So this is up 8.17% as of last Friday. This makes up 3.09% portfolio, or $8,601. 52%. Johnson & Johnson, which is in the healthcare space, they sell a lot of consumer products, pharmaceuticals, as well as medical devices. This makes up 3.04% portfolio, or $8,454. I'm up 12.53%. Next is McDonald's, which is one of the largest restaurant chains. This makes up 2.1% portfolio, or $5,828. I'm up 20.86%. So a lot of their physical brick and mortar stores are closed and they don't have dine-in available, but they're innovating in their delivery and partnering with a lot of the restaurant aggregators to get their food to consumers. United Health, which is in the insurance and healthcare space, this makes up 2.07% portfolio, or $5,752. I'm up 75%. Home Depot, which is in home improvement, this makes up 1.72% portfolio, or $4,782. I'm up 75%. Boeing, which took a significant dip because people are traveling less, but hopefully in the long term they'll do better. This makes up 1.7% portfolio, or $4,738. I'm down 29.86%. So in terms of the travel industry, it seems like the business travel hasn't really picked up. Some of the personal vacation travel, people are also not doing as well. But hopefully their aerospace and defense segment will make up for some of their travel, like aircraft. PayPal, which is in the payment processing space, makes up 1.69% portfolio, or $4,705. I'm up 156%. So PayPal has been benefiting from the recent climate of more online transactions because people want to go contactless. So PayPal is benefiting from that. AT&T, which is in the telecommunication space, makes up 1.58% portfolio, or $4,404, down 17.68%. And I think their growth It's going to be in the streaming service, their HBO Max. But in terms of their fixed lines as well as their other older communication technology, it's not really growing as much, but HBO Max has the potential to grow. Costco, which is in the warehouse membership retail space, this makes up 1.52% portfolio, or $4,235. I'm up 35%. And as people continue to buy their consumer staples, Costco will benefit from that. It's a very high retention rate from their membership. Berkshire Hathaway, which has a large stake in Apple and some big banks, as well as some other companies. This makes up 1.27% portfolio, or $3,528. I'm up 5.98%. PepsiCo, which is in the beverages and snacks, this makes up 1.14% portfolio, or $3,166. I'm up 16%. 3M, which is in the industrial space, this makes up 1.08% portfolio, or $3,009, down 22%. Next is Baozun, which is the Shopify of China. I think Baozun will continue to benefit from online retail. This makes up 0.97% portfolio, or $2,691. I'm up 21%. Next, Sarah Energy, which is in the clean energy solutions. This makes up 0.91% portfolio, or $2,526, up 60%. Next is Taiwan Semiconductor Manufacturing Company. This actually surged recently because Intel is trying to outsource some of the manufacturing. This makes up 0.88% portfolio, or $2,441. I'm up 75% on this position. Activision Blizzard. This makes up 0.72% portfolio, or $1,988. I'm up 25.96%. And as more people are staying indoors and continue to game, Activision will benefit from that. Cisco, which is in the networking communication space, makes up 0.63% portfolio, or $1,741, up 11.79%. Scrolling down a bit. Disney is in the entertainment space, both parks, streaming service. I think there's a lot of growth potential for the streaming service. And even though they're closing a lot of their parks due to the current climate, I think they'll benefit in the long run once things reopen. This makes up 0.63% portfolio, or $1,739, up 13.23%. The Trade Desk, which is in programmatic advertising, this makes up 0.32% portfolio, or $900. I'm up 54.6%. Baidu, which is the Google of China, this makes up 0.47% portfolio, or $1,313, down 35%. Constellation Brands, which is in the beer, wine, and spirits, this makes up 0.19% portfolio, or $534, down 19.48%. iQIYI, which is the kind of like Netflix of China, makes up 0.15% portfolio, or $421, down 30.37%. Vanguard Megacap Value ETF makes up 0.6% portfolio, or $1,662, up 13.42%. Vanguard Consumer Discretionary ETF makes up 0.86% portfolio, or $2,402, up 76%. Last but not least is Vanguard Healthcare ETF, makes up 0.66% portfolio, or $1,824, up 56%. Actually, no, I saw one more ETF. Vanguard Industrials ETF, which makes up 0.44% portfolio, or $1,221, up 11.45%. I'm going to scroll up slowly so you see my portfolio. So some ETFs, a lot of exposure to technology because I think there's a lot of growth potential in the long run. And I'm fairly diversified in some international stocks as well as domestic US stocks. Have a very large position. So that's all my Robinhood portfolio. I plan to continue holding these stocks and ETFs and buying more stocks, preferably a good balance between dividend paying stocks and growth stocks. I also plan on increasing my cash position currently at $31,000 and $30,000 in another high yield savings account. So I can easily buy when there are opportunities to buy. That's all for this video. What are your thoughts on this portfolio? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or a free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.